What's up, you guys? Welcome back to Unorthodox Savings. In today's episode, we're talking about taxes. So for everybody's sake, this video is going to be short and to the point. If you don't know anything about it, you get taxed on your stocks, and I'm going to teach you what you need to know so you don't get blindsided if you're new to investing. So starting right off, I'm going ahead and just going to tell you guys straight up, I have not paid taxes since 2008. IRS, if you're seeing this, that is a joke. Please do not come to my house. I apologize. Getting into it, guys, there's two things you need to know. If you're buying a stock and you're holding it for a year or shorter, so it means you're going to buy and sell a stock within that year, then you need to know this. So if you buy a stock at $100 and it gains $10, it's called an unrealized gain. And then if it does the opposite, you lose $10, it's called an unrealized loss. You will not be taxed on that. But if you sell the stock, then you will be taxed on that. So for the reason why it's important if you have a stock for a year or shorter is that you will get taxed at a higher rate. So it doesn't matter what kind of investor you are, it does matter a little bit, but what you guys need to know is that if you have it for a year or shorter, whether you're a day trader, swing trader, or you just know stock's gonna rise real quick and you wanna make a profit, you're going to get taxed normally at what you get taxed at if you had a job. So it's going to be a little bit higher. Now, this can make a big difference between the profit you have already. So a lot of people don't know this. If you're new to investing, I don't want you guys to get blindsided at the end of the year. Now, that being said, you do have to file for these. And another important thing you need to know is that you need to file for the losses on stocks, because that is very important. If you lose money on a stock, file for it. It's a tax deduction. You will save money. I know people who have not done this and they had to spend way more money than they normally would have in the first place. So please keep that in mind. For us long-term investors like me, if you hold a stock for a year or longer, you will be gifted with a tax break. So usually, because it depends on the sector and many other things that you're in, it's around 15 to 20%, roughly. Because for the people who do know what they're talking about, they're like, so just understand it's roughly around that. Just to give you guys a number, I know people like to hear the number. Now, it's better this way because you save more money. Now, if you are a dividend long-term investor like I am, you get taxed on your dividends, and you need to know that because they're different than what you normally are. So people think, oh, I earn dividends from a stock, I don't have to pay taxes on its free money. That is not true. You get taxed on your dividends. Now, taxes on dividends do get more difficult because you could have a stock like a REIT, which is a real estate investment trust stock, where you can get taxed higher because the dividends are way higher, and it gets to the whole thing. So for your personal stock that you are already invested in, do your own research. I'll leave a dividend calculator link below. You can just search it up on Google, so at least you know how much that dividend pays, and then you can try to get a ballpark number of what you're gonna get taxed at. Okay guys, I know I'm throwing a lot of information at you very fast, but if you aren't filing your taxes digitally, so like online, and you're doing it in person and paper or through an accountant, you'll get a form by February 15th called a 1099-B. So you'll get February 15th, you'll get a 1099-B, and then you'll be able to take everything from your stock portfolio and file it on there. Now, if you have an app like Robinhood, M1 Finance, Webull, a little bit more popular ones, they usually have everything set up for you, ready to go for when you file your taxes. So to bring everything together for you guys, remember that if you are buying a stock short term, so a year or less, you're going to get taxed higher. And if you hold it longer, you'll get a tax break. If you don't sell the stock, you will not get taxed unless it has a dividend. But other than that, you'll be good to go. So if you hold it, you're not going to get taxed on anything. And another thing you need to know is you will not get taxed on the money you spent for that stock because it already is. So example, if you're working a job and you got taxed on that money to get your paycheck, and you use that $100 to buy a $100 stock, that $100 that's into that stock will not get taxed. It's only what you earn or lose on that stock, if that makes sense. I know that everything can get a little bit confusing because taxes are not fun, and they purposely make them difficult for no reason. You're always going to be learning something new about taxes because they're always changing as well. So when I was 18 years old and I started investing, I did not know that you got taxed at a higher rate if you sell a stock within a year. So I was buying a stock on Robinhood, earning like $5, selling it, doing that over and over again, not day trading, but just like on a weekly, monthly basis, not knowing the consequences of that. And it's not all that dire. I'm not making all that much profit to get taxed that much in the first place. So I just want to help share this with the newer investors so you understand, because when you first start investing, there's a lot to take on, there's a lot to research, there's a lot to understand, and I don't want you guys to go in there, have fun, learn everything. You may lose money on a stock, you might make money on a stock, and then at the end of the year when you file taxes and you see, oh, I have to file for my stocks, remember to file even the losses on your stocks, even the gains, everything, just do it. Alright guys, thank you guys very much for watching. Just a heads up, remember, I am not a financial advisor. If you need help on your taxes, you should go contact your local CPA. Hire a professional to get this done because they know what they're doing. I'm a guy with a camera in my room. I appreciate all the support. Recently, I hit around 330 subscribers, which is a huge goal. I was never going to think that I was going to grow at this rate. You guys have been very supportive. I appreciate you all. I'm going to leave a link down below for Webull. They get your 2 free stocks. If you use $100 to start investing today, one of those stocks will be worth up to $1,600 now. Down below, I'm going to leave a link for Morning Brew. Morning Brew is a newsletter. You get it through your email. It's completely free. I'm not affiliated, but I am doing a giveaway. If you're interested in that, go check out my Instagram. It's just things like stickers, t-shirts, things like that from Morning Brew. So that's my gift to you guys. I'll pay for shipping and handling everything. Thank you guys again. Comment down below, like, subscribe, and I'll see you next time.